The Canadian housing bubble. Are we heading for a burst? Are you curious about the latest shocking news in Canada's real estate market? With inventory skyrocketing and home sales plummeting, you won't believe what's happening next. Today, I want to talk about something big happening in Canada's real estate market. According to a new report from RBC, the number of houses available for sale is going up fast. This might be because many people can't afford their mortgage payments. New buyers find the houses too expensive because of the housing bubble. According to the Bank of Canada, the total amount of outstanding credit in Canada during the period of 2002 and 2004 was substantial. In 2002, the total amount of outstanding credit was $544.4 billion, which increased $595 billion in 2003 and further 655 billion in 2004. This data represents the total amount of credit borrowed by individuals, businesses and governments in Canada during this period. The data is based on Bank of Canada's balance of payments as well as international investment. When debt grows faster, the wages and economy that's a bubble can last for a while because people keep borrowing to pay off old debts. But when interest rates go up, borrowing becomes unsustainable, and that's what's happening now. In Canada's big cities like Toronto, Vancouver, Montreal, Calgary, more houses are being listed for sale, but fewer people are buying. This makes it easier for buyers because they have more options, and sellers are trying to sell before interest rates go down. RBC explains that more condos are being completed in Toronto, and struggling homeowners are also selling. Interest rate cuts by the Bank of Canada didn't help much, as buyers are cautious and waiting to see what happens next. Prices in cities like Vancouver are not going up much, and even though Calgary's prices are higher, their inflation rate is the highest in the country. So it doesn't mean much in real terms. Toronto prices are down, and we're still waiting for more data from Montreal. There was a lot of talk about the Bank of Canada cutting rates to boost buying, but that didn't happen. Home prices are still high, and the small drop in mortgage rates doesn't help much. The real prices adjusted for inflation show that we're still way above where we should be. Toronto has been the main focus, with many homes owned by investors rather than locals. Many new constructions are bought by investors, and this isn't just happening in Toronto, but in other cities too. The speculation has created a bubble. The Bank of Canada cut rates by 0.25%, and inflation slightly pulled back, but the economy is still struggling. Lower consumption and reduced company profits might bring inflation down, but it's all quite uncertain. Thanks for watching, and if you found this video informative, don't forget to like, share, and subscribe for more updates on the Canadian real estate market. Leave a comment below with your thoughts and let us know what topics you'd like us to cover next.